Welcome, everybody. We're just about to go live. I'm just waiting for all the platforms to catch up. We are going live on Instagram. Everything is looking good. Right, cool. We're just going to wait for a few people to enter. Naturally, not everyone's going to be piling in right in the first second. But, for anyone who is watching currently, obviously, this is going to be a live trading session. And it will be Richard, who you probably already know from the podcasts. So Richard, how are you doing again?
Hello, everyone. Thank you. Thanks, Sam. Very good. Thank you. Nice and hot here today.
Oh, really? Lucky you.
Yeah, very hot, actually. The air conditioning is on. It's 4 p.m. in the afternoon. Well, almost, yeah. And I'm worried when they're actually leaving, they're going to switch off the aircon, and I'm probably going to be sweating my backside off here. But we'll see.
Well, it's a good problem to have. I wish I had more sunshine in my life.
I do not like winter. That's for sure.
We're going to give it a few more minutes still. Just waiting for the people to come in. It usually takes a few minutes, but I can see some people coming in. Let all the platforms catch up. As everyone, Instagram, people are starting to join. That's great. Hello, everyone who's joining from all different platforms. I hope everyone is doing well. We've got a very good session coming up today. Richard's going to be showing us his trading style, his trading strategy, and hopefully there will be a setup. That's always going to be fun to watch. So we're going to give it a few more minutes, guys, just to allow everyone to enter. We've only been live for 2 minutes, so naturally people are going to take a few minutes extra just to come in. But if you have any questions throughout this stream, trading related, feel free to post them. We are watching the comments and we will get back to every single comment or question that you guys post. So just bear with us. It will look pretty good. How many views are we coming in now? Is it slowly people starting to join? That's cool. Okay. I think we can start probably getting in the charts. So I'm going to go ahead and pop your chart up on the screen.
Okay.
Boom. There we are.
Perfect.
Good.
Thanks, Sam.
Richard.
Right. Hello, everyone. Thanks for joining today. My name's Richard, as Sam said. I'm based in South Africa. I've been trading for about 15 years. And the strategy I'm going to be focusing on today, and actually for the remainder of the sessions and the future, is called the morning liquidity sweep. Now, the strategy works excessively well on the NASDAQ, as well as on the S&P 500 CFDs that I'm going to be trading here. You can trade futures or whatever it is that you trade on your side. But the chart setup that I have here is I'm going to be using two time frames, namely a 5-minute as well as a 1-minute time frame. There are quite a few steps involved to execute a strategy, and they all need to all fall in place before I even take a trade. So please note the session will be going on for 2 hours, and hopefully the market gives us some setup to actually take. But there will be days when we present this in the future again that you potentially might not have a setup. So I'm not going to be forcing any trades. I just don't do that. I used to do that in the past. Thankfully, I don't. And there might be times where things just move too fast and you miss a trade, and I'm not going to chase it either. So just be aware of that, okay? If you've got any questions during the actual presentation or the session, then please, like Sam said, please drop them there in the chat. I'll be more than happy to answer them. Just like if I do get into a trade, I might have to focus quite a bit. So then Sam can take care of that for me, hopefully. All right, so on the chart here, I've got the NASDAQ 100 loaded. Got a 5-minute time frame. And as I mentioned, I'm looking at what's called, the strategy is called the morning liquidity run. Potentially during today's session, it might take a while to actually explain everything and also trying to look at the markets, and hopefully we don't get a setup while I'm explaining. So it's going to be a bit of a difficult one to pull off, but it's very important for me that you guys 100% understand what it is I'm doing, what I'm looking for. And hopefully, this can help you guys out in your own trading in the future. Right. That being said, we're on a 5-minute chart here on the NASDAQ. So what I'll typically do is, let's say 10 minutes before 9 a.m. Eastern, I'll go and open my charts. Normally I'm here about, in my office that is, around about an hour before 9 a.m. So 8 a.m. Eastern Standard Time. That's actually 3 p.m. in the morning, afternoon in South Africa. And what I'll go do is actually drop a line at, now I have to close this chart a little bit because I can't see my, hang on one second, because I cannot see my timestamps on the bottom. But before I do that, will manipulate that in just a second here. Just give you a good example of what it is I'm doing, assuming this is now yesterday's price action on a 5-minute time frame. So the first thing I'll go do is actually go draw in quite a few lines here. And the first vertical lines, this one just marks off the midnight mark, so the start of the day. And this over here, these two purple vertical lines marks off the 9 a.m. to 11 a.m. timestamps, Eastern again, all right? So if you're in a different time zone, just make sure that this strategy works well during the 9 a.m. to 11 a.m. Eastern time. So you need to go figure that out, what that is in your time frame, all right? So generally what happens with the NASDAQ is you get very often a lot of reversals during this time window. Because here we had one down here, not too big. It actually exited that time window after the 11 a.m. mark, and we had to move back upwards. This actually has been happening this week quite a few times. It's only Wednesday, midweek thus far, but there was a few occasions where price actually reversed prior to entering the 9 a.m. Time window. Right, so that is basically just the homework I do. Obviously, very important to also note that you need to go and check the economic calendar. Make sure that during that time window, you're potentially not taking trades. Well, I know you can trade with Hola Prime during your news events, but I just need to be aware of these news events. I don't want to be trading into a CPI number or something like that, or the Fed having a chat or something like that. And then, the potential is there that you might get stopped out, and just be aware of that from a risk perspective. Then the next thing I want to do is actually my second step, or you can actually call it your your first step of the actual strategy. This is just for me, my pre-market prep that I do, is that I want to, during this time window, see price take out an overnight session high or the overnight session low on the 5-minute time frame. All right. Now, with this chart over here, we can see price actually reverse prior to it entering the 9 a.m. Eastern Standard Time. That's not a trade that I would have taken. It has to occur during that time window. But let's assume, for example, this did occur during the 9 a.m. To 11 a.m. Eastern time window. Then I just want to draw another line in here. I want to see price take an overnight session high or low. And we got a beautiful situation here where it actually just did that. All right. It pipped that session high, and we had a strong reversal to the downside. All right. So this is typically what I'm going to do. I'm going to see what we call a liquidity sweep. Now, whether that is stop loss running or whatever you want to call it, this occurs very, very often, that you'll see that big institutional players position themselves for the day directionally, and quite often they'll take out what we call a liquidity sweep, and it's generally located above or below overnight session highs or lows. Now, that being said, there might be some days where you have very strong trending markets. Let's say, for example, let's get my path tool out. Price continue doing this, for example. All right, and you had the overnight session high that's already been broken, but price is just continuing to trend to the upside. Then what I'll do is look at if there was actually a previous day structural high or low that the price is approaching. Okay. And in this case, for example, it did not happen, but I'm just speaking as if it might have happened. Let's say price took out that high of the previous day instead within that time window, and then we start getting a reversal to the downside. That's exactly what I want to see. Right. So that's step one. You want to see price basically take out a imported key level, whether that's an overnight session high or low, or previous day key structural level, however you want to call it. So that's the first thing I want to do. We'll see happen in the market, and this all needs to happen on the 5-minute time frame. Okay. Then what I want to do is, as soon as I start seeing price actually reversing, sometimes we'll go a little bit higher than a structural high or low or key level and then reverse. But the first thing I want to do, and this is step number 2, I'll go to a 1 minute time frame. And I want to see when price does reverse, if it reverses, I want to see that it actually starts breaking previous structures or change of character, as I call it. So as you all know, let's say this little trend here, an uptrend defined by higher highs, higher lows, higher highs, higher lows, right? So let's say what I mean by a change of character is during that time window, if price breaks key level, step 1. Step 2, I want to see price move lower. And in this case, I want to see price break a higher low. So higher highs, higher lows, higher highs, higher lows. And that's just a very, how can you say, a simple or very easy early warning sign that a trend might potentially be reversing. Okay. And so that's step number 2. We want to see price break a previous structure point or change in character, change in potential trend direction, and that potentially is an early sign that a reversal is occurring. The third step, and this is very, very important, on a 1 minute time frame again, I would prefer to see, this doesn't always set up like this, but I prefer to see as price moves lower and it breaks that price structure point, the previous price structure point, I want to see a fair value gap. Now, those that are not familiar with a fair value gap, maybe just drop in the chat if you're not familiar with it, then I'll definitely go over with that with you guys soon. Maybe just after I explain all the steps, and then I'll be more than happy to show you what that is. But I'll use fair value gaps. I prefer to actually call them acceleration gaps. But you probably heard about fair value gaps before. It's basically a 3 candlestick formation where there's a gap that occurs between your first and third candle. And generally, it's your second candle in a formation that creates that gap. And they quite often occur they occur because of a very long body or acceleration. Now, you could probably go overlay volume over this and it potentially show you that volume is actually picking up. If that's something you want to use with us, then definitely you can see on this, for this session at least, I'm not going to be using any indicators whatsoever. Right, so fair value gaps will then be used on a 1 minute time frame. Preferably, it should occur prior to price breaking that previous price structure point. That's step number 3. If that does occur, and this is actually a beautiful example, although it didn't occur during the time frame I wanted to trade or time window, we had this move lower, breaks that price structure point, and immediately after it breaks it, we can see that there was also a fair value gap. Price then moves back into it, and that's often a very well. The fair value gaps will often get tested, which is a good thing, and they often act as very good support and resistance zones. So I'll use the fair value gap as my trade location zone, if that makes sense. And then all I really want to do is for price to move back into it, and this is where a bit of subjectivity can creep in. You can either try to enter a trade, in this case trying to go short, in the middle of that fair value gap. I quite often, because things can move very quickly on the NASDAQ especially, just like to place a sell limit order if you're quick enough, or if price enters that and you don't have enough time, I'll just hit a market order and sell at the bottom end of the fair value gap. But if you want to, I won't say it's not more risky, maybe a bit more conservative, if you want to enter around the middle instead, then, that's potentially something you can do. But just note that the NASDAQ does move fast. Sometimes it just touches that lower end and it reverses and you're not in the trade. Okay, so I'll have a resting sell limit order as soon as all these 3 steps have set up. So step 4 would then be placing your sell limit order or getting into a trade if price retests that fair value gap, whether you want to place it at the lower end, in this case, price moving lower, or in the middle of that fair value gap. And that's how I enter a trade. Step 5, when you're in a trade, you should already know where you want to be placing your stop loss. If your fair value gap is pretty close to a previous swing or the actual swing high and low, in this case, the swing high, I prefer to place my stop loss a little bit above that area. And then I want to at least aim for a 3-to-1 risk reward ratio. But I do use a dynamic stop or risk management strategy where I'd like to get out on a 1-to-1 risk reward with half of the amount of lots that I traded. And with the remainder, I'll have a 1-to-3 risk reward ratio set there. And then if price then, starts accelerating in the direction, I'll also start aggressively trailing my stops and reducing my risk. The reason why I want to get half of my lots off at a 1-to-1 ratio is with the strategy, I found very, very often, a very high percentage of times that price will at least move a 1-to-1. Not always, you can't say that always in the markets, but this is a very aggressive risk management strategy where I at least take half my position off. And what I'll do then with my remaining position is move that midway to, or my stop loss, move that midway to from where I entered to where my stop loss was originally placed. So if the market then does move back upwards and it takes my stop out after I adjusted midway, then at least I'm walking away with no profit, but I didn't take any loss, maybe just a little bit in, obviously, commissions, in this case, the spread. All right, so the cost of the actual trade. But also not moving it to break even too quickly, because then quite often you might get stopped out too fast, if that makes sense. So you kind of, for that initial first 1-to-1, you want to get out with half positions. If you're trading with more than, I'm probably going to be trading with like 6 lots here. I'll take 3 off at a 1-to-1 risk reward ratio and then see if the market does start moving in my direction. I want to start trying to milk as much profit out of it as I potentially can. Okay. Right, so that's the explanation on the 1 minute. I just quickly want to go back to the 5 minute here. And I also don't want to lose track of what's happening currently in the market, but I'm actually working on a cheat sheet, if you will, for you guys for the next sessions. So that will be available next time. So please do join. Again, if you find this informative or fun at least to watch, then that will just bring you up to speed quickly with all the steps. Maybe have it on your PC or print it out, so you can just more quickly follow along. And as always, again, guys, ask any questions that you might have. That will be more than happy to answer them for you. Right, so that's called the morning liquidity sweep. And the reason why I want to trade is because there's often a reversal between the 9 a.m. to 11 a.m. trade window. And because of that, I then use that information or that occurrence to my favor and try to get an edge of how to actually participate in that reversal, if that makes sense. Right, so that was yesterday's price action. Got a beautiful reversal again here, and you can go mark this up in your chart on a 5-minute time frame. Go draw your lines from 9 a.m. to 11 a.m. and you'll see how often you actually get reversals during that time. Here was a beautiful reversal over here. This was on Tuesday. Monday, same as today, potentially a little reversal prior to that time window, but again, massive reversal. And this one on Friday was actually a very beautiful trade setup. You can see price took out as it entered into that time window, the overnight session high and low, and also a very strong reversal downwards. We also had a reversal back to the upside. One more thing I want to mention here is if I do get involved in that first setup and it was profitable, then I'll typically walk away and that was the end of the day for me. All right. I will, in most cases, not try to, let's say I got out here somewhere. Let's blow that up a little bit. I'll zoom in a bit more. Let's say to take this trade over here. You can see beautifully our price just pips that. We get a reversal lower. You get price structure being broken. This is not a 5. It will have obviously happened on a 1 minute. You get a reversal to downside. Let's say I took a trade there and you get out somewhere. Although there was another reversal a little bit later, this is about 10 a.m. I would not have taken that trade because, you made your money. For me personally, you can obviously do what you want to, but the trade worked out for me. That's it for me for the end of the day, and that was the setup. I don't want to go risk it again to get involved with another reversal to the upside, although this one potentially would have worked out really well. But more of a grind back to the upside rather than this fast decline that we've seen over here. But if you did get into the trade, maybe you would have made money there. But for me, why risk it? You've made your money already, then I would just walk away and be happy for the rest of the day. So quite often, because there are quite a few steps involved in a strategy, when everything does line up, you've really got a high probability trade setup that you're dealing with. So, and does all of these always set up the way I want it? Definitely not. It's just the way the markets are. Right, and that in very short, although it probably took me, 15 minutes to explain that, is what I'm looking at. I just actually want to get this window a bit smaller so that we can, let me just get that. Is it still sharing?
Yeah, it's still sharing. We can still see the
sharing, but I cannot see the bottom side of my charts. You see how it's cutting it off, so I don't know where the line marker is.
It's widescreen now, but yeah, there is the time itself is cut off. I'm not entirely sure why.
All right, let me quickly see if I can change this chart around, or open another one at least.
No problem. And to the viewers, while Richard does that, if you do have any comments, please, now's a good time. Start posting a few comments while we, take a few seconds just to get this right. Let's see.
I do apologize for that, but let's see.
No, this is part of being live. Sometimes there's a few teething issues, but this is part of the game. When it's not pre-recorded, you can't edit stuff out. So.
All right, now let's share that again and see if it works this time around.
Let's do it.
How about now? That's a bit better.
There we go. Yeah, perfect. Full screen. Beautiful. Awesome.
All right, I do apologize.
Not many talents.
There we go. So we on the 5-minute time frame here again. Again, I would have gone and dropped my first vertical line there to mark off the start of the day, and then 2 more between 9 a.m. I'll use different colors for that, and 11 a.m. The other thing I don't think I mentioned is that I do need to see this particular setup occur during that time window. If it doesn't occur during that time window, it's just not a trading day for me. No setup, and I'll just walk away and come back the next day again. Right, so this is today's price action. Another reason I draw that line at the beginning of start of the day, because you can very quickly see prior to price reaching the 9 a.m. mark where the overnight session high and lows were. All right, so we got a bit of a cluster over there. And this is why I'm saying hopefully that reversal we've been looking for did not happen already. It might be same as yesterday where price 10-15 minutes prior to the trade window actually gave us the reversal we were looking for. Right, so unfortunately, no reversal during that time window. And I do follow my trading rules religiously. We do have price taking out the overnight session lows, for example, at the moment. Should price continue lower pretty strongly, then we could potentially have a look at these clusters of lows over here. Even if it drops even further, potentially these lows over here, which price might reach, and then we only see a reversal. All right, so that is what I'm looking at. Again, the reason why I got all of these steps, I can say it's almost like a mechanical trading system where, although it is discretionary, obviously, following these steps really keeps me focused. It keeps me disciplined. And, I don't try to go and wangle things and try to force a trade whatsoever. I'm very patient. And I also like that it occurs during that time window because it's a time period during my day which is perfect for me for trading. So I don't know, we probably have hands up if we have some traders from the US with us. if you actually not allowed to, you probably can do what you want to. If you can trade during that time window, then this might be a nice strategy that you might want to follow. But yeah, that's the reason why I won't say I 100% developed a strategy. I took bits and pieces from different strategies that I've seen in the past, and then combine that with the fair value gap, knowing that occurrence where you get these what we call sweeps, where they tend to run highs and lows, and then when you get a lot of volume actually entering into the market, you get those reversals. And knowing that it occurs during that time window, you use that to your advantage to try and get into a trade. So yeah, that's in short the strategy. So now it is just basically wait and see. Something else. I don't know if you have any questions on that side you can see, Sam.
No questions yet from the viewers. I'm sure some will come though, but this is looking very interesting. It's interesting because your strategy is very similar to mine in terms of how we look at the charts, how we, our thought process behind it. So for me, it's fascinating seeing someone else take a different, not a different approach, but almost like a slight different spin to it as well. And yeah, I find that fascinating. So I'm really hoping there is a setup.
Yeah, same here. It is a long session, I must say, for 2 hours. So hopefully we got a lot to talk about here. Hopefully those questions come rolling in. But again, I know this, especially when you're new to this and you like what you're seeing, if it doesn't make sense in the beginning, don't worry. We're going to have future sessions. I think we're planning on Tuesday and Thursdays, starting in next month, which is already next week.
Yeah.
And yeah, and then I'll get that cheat sheet going for you guys. Just got to pass it by the powers that are, and then see if they, approve that, and then we can hand it out to you guys. Just something to show you to get you up to speed with the strategy, because there are a few steps involved. So again, don't worry if it's all confusing. Hopefully something does set up. It's always better to see things in live action rather than trying to explain things all the time.
Absolutely. And this is the part, that people don't see really on YouTube, the part where you're just sitting and waiting,
Yeah.
That is the reality of being a trader most of the time. You are waiting around. It's not always you're in a trade making money. 90%.
Yeah, I think it's a huge misconception where some people think, I'm just going to switch on my screens today.
Yeah.
I've got an hour gap today. Tomorrow that gap might be on a different time frame, and you think you're going to just get a setup. It doesn't work that way.
No, exactly. It's always a structured approach works best in trading.
Yeah.
Again, find something that fits you. Borrow stuff from other people. If there's something in Richard's strategy that's really catching your eye and you can see it implementing into your strategy that could improve the way you trade, absolutely. That's what it's about at the end of the day. Like Richard said, his strategy is a combination of different things, and he pieced it together to create something that works for him. And
yes. Absolutely.
So again, it's to do with patience. This is part of the reality of being trading. But yeah, once you have your strategy outlined, now whether you're a complete beginner and you've never traded before, or someone who's maybe done it for a few months and you're kind of learning the basics, you're getting kind of the rhythm a bit of it, you can always learn, right? And if it's a bit overwhelming, if you are a beginner, we get it. We were there once. The key to learning is repetition. If you watch it once, it's going to go over your head. You might catch 10%. Watch it another time. You'll catch another 10%, maybe 15%. Watch it again, and you will start picking up on, your eyes will start getting trained to spot the opportunities as well. So it's repetition.
Like it becomes second nature almost. You know exactly what you're looking for. Again, just need to have that discipline to actually follow the strategy, and then there you go. And being consistent with it as well, also, I think we talked about this during one of our podcasts, is that you need to gain confidence in your strategy as well. So if you don't have confidence, you're going to miss trades. You're going to be scared taking trades, and an emotional toll that takes. And I think it's even worse seeing a trade that would have worked out and you didn't pull the trigger, and it runs your way, and it's like, I think that's the worst, rather than actually missing a trade. It's like you were too scared to pull the trigger, sort of thing. So you're always going to be like a robot in your approach. Just don't overthink things. If you trust your strategy, that only comes with like backtesting it or trading it live and that sort of stuff. And I don't second guess this at all. If it sets up, it sets up. But because there are so many steps, I know those steps won't always fall in line. But if they do, then I'm pretty confident that this trade will has a high probability of working out.
That's it. If you have all the confluences in front of you, if you have all all the steps in your strategy being ticked off, that's the moment where you have to pull the trigger. Do not be afraid, because you'll see, people will pull the trigger on opportunities. I wouldn't call them opportunities, but on things they see that completely out of line of their strategy, completely, don't really have anything there. They'll happily pull the trigger sometimes, but then they'll see something that really does align, and they're nervous. I don't know why that is, but I think maybe they are scared that if it doesn't work out, it takes away a bit of hope. Maybe they had too much hope for the strategy, but don't see it like that. If it doesn't work out once, it doesn't mean it's useless and you can abandon the strategy. Absolutely not. If you only look at the negatives, then, well, there wouldn't be a single strategy in the world that works. You know what I mean?
I think we touched on that too the other times, like during a podcast. It's one of the biggest mistakes is that beginner traders jump from one thing to the other. Then give it enough chance or strategy chance to actually, prove itself, if that makes sense. Then again, there's also a lot of strategies that are really hogwash as well. So you need to find something that works for you, and there is some effort involved in that, whether you learn this from someone else or, I don't know, develop your own strategy. But you need to give it some chance, right? If it's got positive expectancy, there will obviously be days where it doesn't work. You might have drawdowns for a couple of days, maybe even during a week, but it's how you manage that. Again, risk management being absolutely crucial about this. Is like how long you actually stay in the game is it's much more important than, just, placing a trade and hopefully it will work and risk the whole house or your whole account on it. You know what I mean? So risk management, risk a small portion of your account. If it doesn't work out, come back the next day and try again. And don't let it affect you too much either,
No, absolutely.
The market's got no place for egos either, so be careful of that.
Absolutely. Yeah, you're going to leave the ego at the door. Absolutely. And this is why I think live trading is so important, right? Because we're going to show you the reality of being a trader. We understand it's not as sexy as you see on YouTube and these flashy videos. That's like Richard said, hogwash, right? A lot of it. This is the reality. It can be a bit boring sometimes. You are sitting and waiting, but notice how Richard has a particular time of the day. He knows what he's looking for. He sets up the charts in a particular way that aligns. And then once he's done that and analyzed and knows what the game plan is and knows what he's looking for, he sits and waits until he waits for the opportunity to arise. He doesn't try and force the opportunity. Oh, could this be it? Maybe, no, be patient.
Yeah.
That is the reality. And when, hopefully, if something does occur in this session, when it does set up, I'm sure you'll see him pull the trigger with no hesitation, boom, in, that's it. That's literally it. Yeah, absolutely.
Yeah, so my worst fears were that things are going to be a bit quiet today, so hopefully that's not the case. But looking at things right now, price has sort of been testing this little structure over here, trying to bounce higher. It could potentially be a reversal in the making here. So as I mentioned, price taking out that just right now, that's not enough for me. I'll have to go look at what's happening on the 1 minute time frame.
It has moved sharply down, and to me, that's always a good indication. When it moves too rapidly, too strongly, I've noticed when a trend is like a train and it just keeps going and going, it does it in a more calm, sort of more progressive way, kind of like a. But when it's like really sharp, that's when I like to keep my eye on it, because there's too much, there's too many people jumping in, there's too much money on the line in a short period of time, and that's always where you want to start looking out.
Yeah, I mean, we could look at like these days, for example. Look at that.
Yeah, exactly.
Look at that drop, and then boom, straight back up.
Yeah.
This all occurring in most of the day, giving more than half of that drop down. Retracing most of that. But don't be scared. This is another thing. When I first started trading the strategy, or when I developed it, there'll be many occasions where it's like, oh my gosh, people say don't catch a falling knife, which in many cases is very true. But at least if you approach it with some sort of plan, then I would say it's perfectly fine to do that. And obviously, if you're managing your risk properly. So it might look very, very dangerous sometimes. A strong decline, you get this V-shaped bottom, and prices immediately reverses back up again. Happens in a blink of an eye. Everything lined up. You didn't take the trade because you were scared. So it still happens. I mean, sometimes you can get you've been waiting for a few days, nothing happens, and the next day you get a very sharp decline or reversal. Nothing set up, and then all of a sudden, after that reversal, you get another reversal, whether it's up or down or whatever. Looks very scary. Your mind can start playing tricks on you. It's like, should I not? So it's perfectly normal that it happens. But that's another reason why I said I've developed a strategy, because there are quite a few steps that need to line up. And when they do line up, they typically point to high probability reversals. So if you know that, then it makes it easier to go and pull that trigger.
Oh, absolutely. And this is another thing that a lot of people miss as well when it comes to trading. You can have, you can learn a strategy off by heart, all the rules, and follow it. But there's no replacing experience, the subconscious part of it. Sometimes you'd look at a chart and you'd be like, you wouldn't know exactly why, but you just get a gut feeling approaching, because somewhere in the back of your mind, you've seen that setup occur. You've seen that the way the candles are forming, and you've looked at enough charts, spent enough hours on them, where subconsciously you kind of get this gut feeling. You kind of know, all right, you get a feeling about a trade, and that you can't replace with. Very hard to explain why sometimes, but that comes with experience. You just got to spend time on the charts.
Absolutely. And I think while you're trying to gain that experience, also do not try to see what's not really there either.
You
can very easily fool yourself as well, seeing things that you want to see. That's not, it's there, obviously. You're seeing something on the chart, but I think, like I mentioned, that need to be right all the time is definitely, there's no place for that in trading whatsoever.
No.
You'll more than often be proven wrong. The market's always right. So because how you deal with that, obviously, managing your risk and, leave the ego at home, accept that you will be wrong quite often. But I think if you at least have a little bit of an edge in the market and you manage your risk properly, then at least you probably in the top 3 percentile of most of the traders out there.
Yeah. We just had a comment come through from a viewer called Khan. He goes, Hola, nice haircut, Forex big boy. I'm assuming that's
you.
For me, I've just got a haircut. I'm glad that people are noticing. Thank you. It's money well spent then.
Looking good today. Yeah.
So
you got a little bit of a gap here that occurred. When was this? Yesterday?
Yeah,
well, that's probably when
that
hour close. Maintenance period.
Yeah.
Right, guys, from my side, if we do get a setup here, it will have to happen at one of these levels that I drew here. I'm going to get rid of these so long because price already sliced through them. So if a setup does occur, how would it look? Well, firstly, price did take out a previous structure point or level, but we'll need to see a bit of a bounce, right? But not just a bounce. I want to see price break previous price structure during this move to the downside. And if it's not very clear on the 5-minute, because it just looks like one heck of a move lower, then you can go see it on a 1-minute. We can see, let me get my path tool out here again. I sometimes get lost in this platform, but there we go. You can see lower lows, lower highs, lower lows, lower highs. Probably count that as a low. So for me to want to be interested in a trade here, price would need to start bouncing higher and then take out that lower high that formed during this current downtrend we're seeing on the 1-minute. If that does occur, without price obviously moving lower again, then I want to see a fair value gap that formed prior to price breaking at price structure point. And if that does occur, I'll use that fair value gap as my trade entry location. Hopefully price retests that, and then I'll get long into a trade. All right, so I think while we wait here, for those that do not know what a fair value gap is, or
yeah, that would be a good time to explain it, I think. Absolutely.
Maybe now it is a good time to explain it, like you mentioned. Guys, fair value gaps occur on all timeframes and all markets, right? Just quickly visually looking at this chart over here, let me just get rid of that path tool. There's a fair value gap that formed here. A bearish fair value gap, or some call them acceleration gaps. It's a 3-candlestick formation. So pay attention. Let me just get the background away there. I don't know if you can see that properly. So 3 candles. This little one over here, a long-bodied one, and a third candle. All right. Now, as soon as you spot a gap, in this case during a bearish situation, between the low of the first candle, and it should be the wicks, right, not the bodies. If there's a gap between the low of, in this case, again, a bearish scenario, of the first candle and a gap by the time the third candle has closed, right, not while it's forming, it needs to close. Between the low of the first candle's wick and the high of the third candle's wick, there's a definite gap over there. Right? That is a fair value gap. Beautiful fair value gap. You can see what price did here. It actually retested a little bit again, and yet another decline. Now, be cautious. You can't just go ahead and trade fair value gaps left, right, and center. They do occur all over the show. It's, for me, very important where they do occur. In this case, during a breakout of a price structure point or change of character, after price took out a level, it's just one more piece of the puzzle, if that makes sense. Right? So that is what a fair value gap is, a bullish scenario, a bearish scenario. Let's see if we can see a bullish one. A nice clear looking one. There's quite a few. There's actually one over here. A lot of traders will tell you that if you look, say, for example, looking at a bullish fair value gap here, that all 3 candles should be green. I think that's a little bit too strict for my liking. As long as you just have a market that's moving in the direction, in this case, a bullish scenario, that to me is a fair value gap that formed over there between the high of the first candle and the low of the wick of the third candle. A very small one, but nonetheless a fair value gap. All right. You also have a lot of online guys telling you that it's how the third candle closes, it's more likely that it's a better fair value gap than not. I tend to not really worry about that too much. For me, all the other steps is already a really good indication that the market wants to reverse, especially when you get a price structure break on the lower time frame. That fair value gap, for me, just helps me. And here we actually have a fair value gap right now. And price has tested it already. So what I'm going to do is go long. Actually, buy limit.
It's happening.
I'm going to go 6 lots on this. And actually gotten a little bit too high here. Should have been right there. But as you see, price already broke that and actually tested it while I was talking a minute ago. So hopefully we can be profitable in this trade. All right. So quite often what I like to do with these trades is I would place my stop loss either at, in this case, the most recent swing low, or I can place it below the first candle that was part of that fair value gap formation. In this case, very close to that actual swing low here. So I'm going to go ahead and place a stop there. So I'll stop. And what you'll see here is that I haven't actually, attached an order to that actual trade, right? Because this will be a bracket order for me because I want to take partially trades off when price does hopefully reach my first target. And I'm not just trading with one target, if that makes sense. But it's definitely something you can do if you wanted to. So now the next thing is I'll just quickly want to visually see how wide that stop is. And I can use my tool here, my, what do you call it? My range tool. But that'll be a 1-to-1, right? Around about 21,265. Let's just get rid of that. And I want to put a sell limit there. And I'll do 3 lots. Oh, sorry. Yeah, half my position off. Things are moving fast here. Hopefully I don't get stopped out, which might potentially be the case here, but let's see. That is the setup. That is the trade. Things moving relatively fast here. Let's see.
So this is the reality of trading, how fast it moves. Notice
what I don't like there is how fast price broke that fair value gap. That's not a good indication, but rules are rules. I had to get long and I did. So whether it works out or not, so be it. The other thing I didn't talk about risk management here is if I do get stopped out on this trade, and let's say I just get stopped out by a fraction, which happens quite a bit, and it reverses back up again, then I'll be willing to take another trade, but I'm only going to take max two stabs at an actual trade, if that makes sense. If price would just continue low from here and, slice through all those lower levels that I drew, then I'll probably just step away and come back to next day and trade again, try again. Okay.
But we'll let it play out. This is it. You don't, well, it depends on your strategy, obviously, but you got to remain calm when you're trading, okay?
Yeah.
Getting nervous, getting all, making rash decisions or getting stressed will cause you to make decisions that probably aren't for the best.
For sure.
However you decide to handle that, that's entirely up to you, whether it's stepping up, walking away from the screen, not looking at it, whether it's, I don't know, playing with a stress ball or I don't know, whatever strategy.
We all deal with these things differently, I suppose.
Whatever it is, it's important to just remain calm, okay? And again, I guess that comes with experience. It's very hard to. And also, if you're not risking money that necessarily you don't rely to survive on, you will be a lot more calmer, okay? If you're risking money that you need to have, it's very hard. So it's important to kind of, again, have realistic expectations, right?
For sure. Sorry, I'm just actually getting messages on the side here. I just want to switch those notifications off. All right, so let's say this trade at least reaches my 1-to-1 risk-reward ratio. All right, then I'll be left with half of the lots, right? So what I'll do then is, let me just get a drawing tool out. I'll then drag my stop loss on the remaining 3 contracts or 3 lots to midway between where I entered and where my stop loss was, right? So even if the market then reverses lower after reaching, if it does reach my first target, then at least, you'll walk away break even type, sort of with a trade, right? But if I move that stop loss too quick to break even, there's a very high probability that you might get stopped out too soon, and then see the market in most cases run in your direction without you, which can be a real gut punch sometimes. But anyway,
I mean, to me, it's not actually looking too bad. Obviously, I don't trade exactly how your strategy is, but for me, to me, it just looked like it went in for a retest, and it's starting to make its move. Sometimes it can take a bit of time. It doesn't mean when you enter, it's just going to accelerate to, where you want it to go. It can play around. The market people can be stubborn in the market. Not everyone wants to lose their position. People can, be stubborn, and you get this kind of slow sideward, but eventually the pressure gets relieved and it fires. So again, patience, trust your original analysis, and be calm. Starting to push up, which is good.
So it's about 68 pips to first target, 1-to-1. And what we can do is, if you calculate that just very quickly, let's say 68 times 2 would be 136. Let's mark that off. I can actually go and drop orders in there now if I wanted to.
Very nice.
And if we had a 3-2-1 and 68 times 3, that would be 204. That's quite a fair distance. But if you've traded the NASDAQ before, it can easily reach those
my bias is in line with yours, because I'm bullish on the S&P 500. So and the NAS100 generally, they kind of mimic each other. So
they do very, very closely. I'm actually just going to look at the NASDAQ for today's session, and I think when a lot of traders actually get up to speed with us, we're going to start looking at the ES as well. Although they move very similar to each other, there will be instances where you get that fair value gap on the ES and not on the NASDAQ, and vice versa.
Yeah, absolutely.
So I got 3 here. If price does take that out, then obviously great. That's a 2-to-1 risk-reward ratio. Obviously, it won't be total risk-reward ratio of 1-to-2, sorry, because you already took, some of your contracts off here. But what I generally like to do is, let's say, put the remaining orders in there with 1 to 3.
Mm-hmm.
And if price does reach your 1 to 2, then I'll already be at break even at that point anyway and start aggressively trading my stop.
Yeah. No, but it's looking very good. It's looking very good.
Well, let's hope so. So what was 68 from my entry to my stop loss, which will be 34 ticks, right? That's midway. I just want to get exactly that level that I want to drag my stop to if we do see price actually reaching 1-to-1. Right, so that's the setup. Let's see what happens. Again, a lot of patience required here. I know for beginner traders especially, you can get very nervous when things don't happen immediately. But when it comes to reversal, sometimes it happens very, very fast, and sometimes it will take a little while to build sort of a base, and then you start seeing those strong moves out of these. So the other thing I wanted to mention was I want to see a setup occur during the 9 to 11 a.m. trade window, right? But let's say, for example, it was about 20 minutes in or 25 minutes in when this trade set up. Let's say it takes till after the time window of 11 a.m. to actually reach my targets, then I'll be happy to manage that afterwards, all right? So I'm not just going to go close the trade because price reached 11 a.m. Cutoff time for the strategy, if that makes sense. Also know, guys, that I've shown the strategy before that will actually, let's say, for example, you had that fair value gap here, right, that we use for the entry. Price just shoots up. It doesn't retest that fair value gap. I know guys that will actually wait for after the time window to see what happens when price pulls into it. Maybe wait for a reversal type of candlestick. And if that does occur, they'll get into that same fair value gap. But for me, then that's too late for me during, that will already be evening time for me, right? Or late afternoon. And, I prefer just to take a trade or set up during that actual trade window, time window. Right, does look like price might be gunning for these highs here. You see it almost reversed most of the time, yeah. So for me, it's looking positive.
We have a question came through. Yeah. It says, Richard, do you recommend adjusting our stop loss based on market movement on this trade, or would you want to stick with the initial stop loss?
I'm going to leave my stop loss there. It's just the way it is. As I mentioned, we don't know what's going to happen. Is the market going to move sideways and then shoot higher, or is it going to reverse from here? I mean, it's so close. What I'll normally do is, let's say price gets within a few pips of my first target, then I'll go, okay, let's move it halfway. You know what I mean? So it's really a personal decision, but I like a very structured approach. You can see here, let's say this trade has worked out. I know for a fact during my beginning days, when, let's say I traded this during my beginning days as a trader, and I've seen this drop here that nearly took us out, then I would have probably just taken a loss there. Get out, rather than, just give up a few more pips that would have cost me a little bit more of a loss. But, for me, it's very structural approach, keeps me disciplined. This is a bit more of a dynamic type of risk management strategy with how I actually trail my stop losses and that sort of things. But yeah, I mean, if we get very close to this, we might start going midway with this stop loss anyway. But just looking at price action and knowing how things generally works in the market, it looks like it's gunning for these highs here. And this is the overnight session high, actually. Was it? Yeah. But what I won't do is move or change this 1-to-1 ratio here. All right. And I won't trade, because I'm trading with 6, I'm going to leave that at 3 or half of it. Because if you, on every single trade that you take, decide to do different things and you do that inconsistently, then you're going to have inconsistent results during the long run, if it makes sense. So hopefully that answered your question. Hopefully price reaches that. We were actually pretty close to price reaching. It was on 21,253. That's still 10 pips away. My midway marker is here around about 21,160-ish, actually 59. Let's see.
This may turn out to be the quickest live session so far. We've never had someone enter a trade in under an hour, so
I hope so. It will also not be nice taking a loss in the first trading session either. So, but it is what it is. And who knows? Price might just go sideways here for another hour and a half. Well, how would we've already been in an hour, right? Yeah, we started an hour ago.
I think you entered maybe. Well, you could probably see which candles just before it dipped, so maybe
it was around about this one here at 9:40. Yeah. Let's see.
So any other questions, feel free to post questions. We have quite a few viewers coming in, a bit late, unfortunately. You missed the whole explanation, you missed it all, but never mind, you can watch it back.
Do we actually record these sessions, don't we?
Yeah, they get uploaded. The moment the live finishes, it goes up on YouTube.
So for those that are joining us now, maybe a good idea to go and watch that to
absolutely
catch up a little bit, especially want to join the next session in the future. Then I'll be going through this, I think, less and less. Like, I don't want to miss a setup. I almost missed this one. Luckily, I looked at the chart. But I think when we get that cheat sheet going for you guys who got that available, it should give you a very quick rundown of what it is I'm looking. It's very self-explanatory.
Absolutely, that does sound fantastic. It's always good to have, additional.
And once you do understand the strategy, do yourself a favor, pull up a 5-minute chart, go mark off these vertical lines, beginning of the day, 9 a.m. to 11 a.m. markers, and go see, just visually, you'll see very often that you get reversals around that time. Actually wanted during that time. Sometimes it just happens slightly before. But just using that information or knowing that occurrence occurs very often, we then use strategy like I'm actually implementing here to take advantage of that knowledge. All right, so hopefully we get a nice little pushback up here now.
Sometimes the market can do this. You can get very close to your take profit and just sometimes like to mess with you a little bit, but
or you drag your target lower, get out, and then 2 seconds later it shoots to the moon.
Yeah.
So I got in with did I get in with a market order? Yeah, I can't remember. It happened so quick.
It did happen very quick because you spotted it and then boom. And I didn't want to distract you, so I just stepped back.
It was actually about 4 pips above that area, but it is what it is. So, right, we might get that push now. Don't fail me.
But again, this is the reality of trading. But if you're disciplined, generally speaking, you won't be spending more than 2 hours on a chart a day. Because you'll even know by then if there was a trade, if there wasn't. If there was, you've entered it and allowing it to play out. If there wasn't, you've already walked away and you're coming back the next day. So
yeah, that's a good point. So the other thing I also want to say, I mean, I've got so many things to say, but let's say a setup occurred, right? And price starts going into your direction, and it already reached, let's say, that 1-to-1 ratio where you would have gotten out with, let's say, half of your lots. But you missed it. Then if price retests that zone, then that for me is already a missed trade. I'm not going to try it again because you should have been out with half your contracts already or your lots. So it's also for me quite important. You need to be there in the moment to actually take the trade like we did here. Yes, it was quite scary. I think within 3 pips, we almost got stopped out, but touch wood, hopefully actually reaches that first target. This is always the more scariest part, is actually price reaching that 1-to-1.
Yeah.
And after that, it's like literally you can just sit back and the market can do what you want. Soon, you got no more risk on the table.
Absolutely. Absolutely. Yeah, and regarding the stop loss to people listening, you got to have it fixed. Don't move it. Don't keep thinking, maybe just move it an extra pip down, because you'll keep moving it and keep moving. Before you know it, you've moved your stop 50 pips in the wrong direction, and it's just getting worse and worse. Believe me,
as a trader, I think we've all been guilty of that.
Absolutely, of course. But learn from our experience. That is, it will happen. You might think,
for example, here I can move my stop up because price has moved in my favor a bit, but never widen your stop, as Sam's saying.
The stop is there, for a reason. It's not just for fun. Like if it hits, and don't be one of those people who thinks, I don't need a stop loss. If it gets here, I'll just exit manually. It's a bad idea as well, because you won't exit manually. You'll wait another few seconds, and those seconds become minutes. And a stop loss is really critical to have in trading, regardless of what strategy you trade.
I think also the reality a lot of traders don't realize is that stop's there to protect you, but once price moves through it, it becomes a market order, right?
Yeah.
If you get caught up in a very volatile situation, let's say during a news event, you're unaware of trading it or you want to trade it, you're not 100% guaranteed that you will get out at exactly that price.
Yeah.
I've been caught up in that where you see price move so fast with gaps. By the time the market order actually catches or gets executed, you filled at a way, way worse price than you intended to be filled at. So that's also part of risk management. Is there any sort of risky events I'm trading into? Do your homework. You need to have a plan prior to your actual trading session, so you know exactly what to do, what to expect, and then hopefully not have to deal with unexpected sort of trades that go against you. The other thing is even worse during the long run is if it actually goes in your favor during a volatile event. You become really cocky. It's like, I can do this now. I'm a real cowboy. And you start, learning bad habits. And as you and me probably know, Sam, it's like, ego's got no place here. You'll very quickly get taught a lesson.
Yeah.
If you learn from, if you get used to your bad habits, it's going to end badly. That's for sure.
Yeah. I mean, we keep repeating this pretty much every time.
Guys,
I heard it. Sorry.
This came within literally, what's that, 2 pips of my first target. I think now would be a good time to let's move halfway. And now it's actually just not reducing, or I'm not reducing my the amount of lots that I'm trading. I'm just reducing the amount of risk I initially took.
Yeah.
Okay. I'm still hopeful. I quite like that the actual first 1-to-1 ratio target is there because it's at this previous high or overnight session high. So I think there is a pretty decent chance that that high will be broken, if that makes sense.
Yeah.
And with it being located slightly below, I think there's a high probability. But who knows? If it moves lower from here, then I'm going to be quite gutted. But it's very easy to be tempted to start moving things around. And then, as we said earlier, and as soon as you do that, Murphy's Law price starts moving in your direction. So
yeah. Sometimes it can feel like the market is listening to you and knows exactly what you don't want it to do. But believe me, that's just pure coincidence. You're not cursed, nothing like that.
yeah,
That happens to everyone. Sometimes it genuinely feels like it's controlled by someone who's got access to your webcam or something and is watching everything.
Yeah.
But no, that's just the market.
I'm getting so close to reaching that target. It's a bit of a bummer. But let's see. Yeah, I did check the economic calendar. There weren't any high impact news events, so
there's a lot of volume going in the market right now, and heavy volume does mean it can move fast, and it can move fast down and rapidly up, and it can be a bit chaotic. So these kind of conditions, they're difficult to hold your nerve, but the only way of learning it is like we said, experience. You just have to. It is what it is, You can only do so much, and out of that, it's kind of out of your hands. And yeah,
I just didn't really like how that drop occurred there, but you see, if I were to drag my my 1-to-1 ratio down here on the 3 lots, then I'll have to move this top a little bit higher as well, because that was my 1-to-1 ratio over there. You always have to assume where you place it initially and where your target was. Obviously, now we're reversing back up again, so I just need to be patient.
It's that volatility. It's the volume.
Scaring out the beginners.
Literally, yeah. A lot of that, it's people getting scared. They make rash decisions, and that's what causes this kind of. When people put too much money on the line in the charts, can cause a bit of chaos.
For sure. Come on, Nasdaq, damn it. It's like a horse. Go, go, go.
I found what works is if you blow into the direction of the chart. Just
I've done that in beginning days, like force it mentally up, go up, go up. And it just doesn't want to do what you want to.
Whoops, almost broke the chair there.
Been putting on some weight there on your side. Or...
I think so. I think it's time for a diet. I've had it too good.
Yeah, I guess Christmas and New Year's wasn't that far back in the past, was it?
Yeah, I think I wish to blame it on Christmas and New Year, but
yeah, same here. Is it going to do it now? Looks like it is going to, hopefully.
A comment says, just close the trade. I can't see it anymore. Well, you see, if it's part of the strategy is to hold because then mathematically that's in the long run, then that's how you have to approach it, right? It depends on the strategy. Richard has a very thought out strategy in terms of risk management. The 1-to-1 ratio where he takes off, was it half your position?
Yeah.
1-to-1? Yeah, half your position at 1-to-1. All this is basically down to mathematics, right? If you break that balance, okay, you might, in this case scenario, it might be more beneficial, but in the long run, you're actually doing worse. So this is it. You can't break the rules of your strategy. This is what we've been repeating over and over.
If you're inconsistent with your risk management, then the overall profitability of your strategy is going to suffer. You're going to have inconsistent results, right?
I do actually think I may have broken this chair.
It sounded like it.
Every time I lean back, I feel like I'm just going to fall back. So I'm going to have to kind of support myself now. In a bit of an uncomfortable position, but it's fine. I will make do.
NASDAQ.
There's a lot of things happening in this live session.
Yep. All right, so what are we going to do? What are we going to do, NASDAQ? Would it be nice to have been out here already? With this top volatile conditions, I mean, all the previous setups that occurred last week, for example, within a matter of like literally less than a minute, the majority of them reached like a 1-to-1.
Yeah.
But I do think still it's going to take that high. And there we go. Order filled. There we left with 3 contracts.
There we go. You see, it likes to play around, but then it does go eventually.
So I need to change this now to 3 contracts, right? So I can't modify that. So I'm just going to place a new one. And remember, I only got 3 lots now. Oh, come on. It's picking up that drawing there the whole time. I'm going to get rid of that. It's frustrating myself, yeah. And let's go sell stop. And it needs to be 3. So I'm actively managing these orders. Don't go and forget about doing this, especially if you did not go and attach it to the actual order, that would have automatically updated itself. Because I manually placed those orders there, I need to make sure that at the end of the day, if I did not go and adjust that because I placed it manually, I walk away and forget that there's 6 sell contracts in the market there. And something happens while you're not watching and you wake up the next day and your account's blown up.
Yep.
Or even better, you made $1 million.
That's true.
All right, so that was a 1-to-1 that's been reached there. I just want to get my...
Any other questions, do feel free to post them. We saw a lot of interesting stuff, a lot of stuff that you guys can learn, not just necessarily from the trade, but from the behavior, okay? behavior Richard showed. It shows experience. It shows how you're meant to manage the trade, right? You can learn a lot. And again, this is live. So this isn't, I don't know, something cherry picked. And look, examples, when you're doing live trading, a lot of people like to cherry pick the perfect examples to, showcase their strategy. And of course, we understand that. But in reality, maybe once in a blue moon, you get that perfect trade where everything is just, you couldn't have asked for a better way, for a better trade. They happen occasionally, but a lot of the time it is quite choppy. You are a bit like, you're kind of a bit on the edge of your seat, but that's the reality. Again, you just have to stick to your guns with it.
Yeah. It that also comes with experience, because I can tell you, it occurs also sometimes when you get like price missing your, let's say, first target, second target, whatever, by literally a pip, and then you see a reversal and you take a loss. That is going to happen. That's for sure. But you need to know that these things do happen. It's not your fault. Yeah, so what I'll do next, because we got three lots left, is once price hits the 1-to-2 ratio, I'll start aggressively trailing my stop.
Mm-hmm.
In fact, right now, the closer it gets to that level, I can even reduce my stop loss a little bit more. I mean, this is where there's a lot of subjectivity that can creep in. A lot of traders might ask me, aren't you a little bit too, I don't know, not aggressive or conservative with this sort of like strategy? But I just found that move that stop too quick and you get stopped out.
Yeah.
For me, it's the most of the stresses before the time price actually reaches that first 1-to-1. But once you got or half of your contracts off the table, then you can actually take a breather, right? And if the market does reverse lower and it takes out that stop, and it's not at break even, at least you're walking, not at the break even level where you entered, and it takes out that stop where you moved it to midway, then at least and a lot of effort went into it, obviously, sitting here and stressing, but at least you're not taking a loss. But I've seen so many times, especially with your NASDAQ, it's a market that when it starts trending properly, it can really, really run. Like last week, I was going to kick myself. It was actually last week, Tuesday or Wednesday, I think it was. Beautiful setup occurred. I did not trade it. And it actually ran a more than a 1-to-10. I think it was 1-to-12 favorable excursion on the actual trade. And I would have got that if I used this strategy of where I then dynamically start trailing my stop. If I just had a 1-to-3 ratio set, that's where the target always goes, I would just walked away with a 1-to-3. The markets won't always gift you those runners, but when they do and you're actually there and you have a strategy to, follow that strong trending move, then milking it as much as you can, then when you do get those big moves, then that's really nice to be part of that, for sure.
Yeah. I'd like to point out as well to any people watching, when we had that little area of, I guess, consolidation, you could call it, where the price was moving quite rapidly, down and up again and down and up, and it was playing around a bit. A good thing to do in order, to help you hold those situations and keep calm is do not look at the profit and loss. Okay, don't look at the profit and loss. Don't look at the dollar amount of your trade. That can mess you up sometimes because you can see it, going from, I don't know, $500 down to $3, and you're like, oh, $200. I missed. do not look at the numbers, all right, the actual dollar amount. Just look at the chart itself, you know. It can mess you up, and you know, you'll make decisions because you're seeing the numbers, the dollar amount, you're making it emotionally based on that. So
very, very good advice. That focus on the quality of the trade rather than the actual numbers, and then if you can, with proper focus and, you know, what's that word escaping my mind now? Can't remember now. What I'm trying to say is focus on the quality of the setup rather than a dollar value, as Sam said there, and do that consistently, and then the money should come, hopefully, you know, if you've got a good strategy. Also, for some people, seeing a dollar amount of, let's say, $512 on there could be, you know, a whole week's worth of money to some people, you know. So it might have a bigger emotional impact than for someone that's potentially a bit more well off, you know.
It was definitely a trick I used earlier on in my trading journey. I got to a point where I stuck a bit of black tape over the part of the screen that would show me my profit and loss. And it genuinely helped me. So, look, I don't know if I would recommend sticking tape on your screen, but it helped me. You might want to use a different, less, you know, extreme method, but it gets the results. It gets the results, right?
All right. The next thing I want to talk about, let's say price does reach that level. You see, I actually moved my stop loss to break even. I actually want to go a few ticks above that. It's very close to that level now. I'm pretty happy doing that. And now you'll actually walk away with some cash if price does reverse lower again.
Absolutely.
A bit of profit. But what I like doing is as soon as price reaches the 1-to-2 ratio, I'll then start aggressively trailing my stop, generally about 2 candlesticks behind the current candle's low, in this case in the bullish scenario. So I'm really trying to milk as much as I can, especially if you get very strong trending moves. With that simple technique, you can quite often stay in a trade for quite some time.
Yeah.
And hopefully we'll get that opportunity to show you that, because I don't just go and trail it behind every single candle's low. I actually want to trail it behind a candle's low that actually made a new high, not a wick, but it actually closed above a previous high. So all of this might sound like too many, you know, rules and stuff there, but I promise you that once you've seen this more than once, hopefully many more times in the future when you join me next time, then it'll become more clearer and easier to understand.
Yeah.
And you'll see that you can either go and place in now your third or your second target, which like I did over there. No price reaches it. But once it reaches that 1-to-2, I will then drag my stop. And you're either going to get stopped out at your target or your stop loss that you've adjusted to the upside.
So, Richard, for the viewers, how long do your average trades usually, like how long are you in a trade on average? I know it could be a broad term, but like on average.
I would say 15 to 20 minutes.
Okay. Yeah. Very nice. Very nice.
Sometimes there'll be days where it could be over in 5 minutes or even less.
Yeah.
But we talk about averages here, then definitely about 15, 20 minutes, I would say.
Yeah. Yeah. It's actually very similar.
This one for quite some time, but just want to see where prices reached now. It's still like sort of retrace a good portion of this decline yesterday. I wonder what that fib ratio would be on the retracement side of things on this drop. Yeah, 76.4. Yeah, it's already gone through the 61.8, so
yeah,
hopefully that's a good sign that price wants to continue higher. Again, who knows? If you're looking a little bit at Elliott wave analysis here, something I apply quite loosely, but just looking at structure, this could still be an impulse wave, the incomplete impulse wave. Something like this could potentially still happen, and then get a correction. Maybe. Careful, like I say, don't, see things that's not really there.
But yeah, we've been live for 1.5 hours. We've seen a trade for a good, I'd say almost an hour, I'd say. Well, probably a bit under an hour, 40 minutes.
Where did we get in? We got in like 22:10, roundabouts. How long have we been? Yeah.
Yeah, 40
almost
minutes.
been an hour. What's it been? 50 minutes now.
Yeah.
Yeah.
It's just been
a bit of a longer one today. At least something to look at, that's for sure.
Exactly. It's a shame. We've only had 2 live sessions now. No, we've had multiple live sessions, but in only 2 of them was a trade place. So,
okay.
Yeah, and never within an hour of being live. So you've made history, Richard.
Hopefully, there's many more to come.
Someone's going to come for your record at some point.
Yeah.
Put it down to, I don't know, half an hour, get a trade in.
You see now how important it was. We had that little reversal prior to price reaching that 9 a.m. mark. It could have been, very tempting, should I say, to try to make a different plan. Like in situations like this now, I should maybe look for something else to try to get in it because I missed it, when that was actually not the nice trade of the day. It was this one we just took right now. And what's also very cool about this, because price broke a previous structure point, which in itself is a form of or an alert of a trend reversal, we actually got in by that fair value gap that formed 2 candles after the actual low, which is what quite often happens with us. It's a very accurate entry, or precision entry type of setup. And you normally get in very close to the actual swing point. That makes sense. All right. Hopefully that's not it now, but it is what it is. We sat through this earlier, nearly got stopped out directly after entering. I was like, oh my gosh.
It happens.
It happens.
Part of the game.
Yeah.
So while such a thing as 100% win rate, well, there would be trillionaires out there.
Yep.
There'd be no need for risk management.
If there was such a thing, they're definitely not telling us about it, that's for sure.
Oh, absolutely.
Yeah, to our viewers, you got any questions? We got about, 27 minutes left. Please feel free to ask. Again, we are looking at the morning liquidity sweep strategy. There's also what's called a morning liquidity run. It's just a different version of this. I prefer this one. With the morning liquidity run, you actually want price to break an overnight session high or low and just continue going. And then maybe see a retest of the break, like a breakout type strategy, a retest, then a fair value gap, and use that as an entry. But this is not a very nice reversal. And I think that what we talked about earlier being potentially a 1, 2, maybe this was a 3, 4, 5, and now we're getting a deeper correction type of thing. So let's see. Now,
Wish I could.
go a bit quiet sometimes. It's just it's a lot to talk about.
Yeah, I mean,
markets moving. It is a 2-hour session. How long was the other session, Sam?
2 hours as well. Yeah, all 2 hours pretty much. But again, I mean, it was because no trades were actually placed. We just explained the setups more and more. So
yeah,
you can talk a lot more. But when you're actually in a trade, I get it.
Yeah, it's difficult.
But that's the viewers get to see actually how it really is. When I see these videos of people, I don't know, on their phone trading and they're, I don't know, driving their car on the highway and trading on it's just unrealistic. Like there's no way you can do stuff like that.
Yeah, I've got no trust in trading on a phone. Maybe because we had power issues recently in South Africa again. If my PC would go down, then at least if I can have some access on my phone, then that's something I will do. To manage an open trade, because that also happened a few times before.
Yeah.
But I've actually got a battery bank with an inverter to keep my PC up if there is a power interruption. But the last time we had these issues, which is actually nationally in South Africa, was like 8 months ago or something. And the batteries I have is like 6 years old. So they don't hold charge for more than 10 minutes. But I just made plans, bought new ones. So if this does occur next week, where I potentially have any issues again, then at least I've got about 8 hours of uptime to compensate for it.
Nice. Yeah, I mean, absolutely. It's good to have, the capabilities of at least checking up on your trade every so often on the phone. But really, you have to be analyzing on you need the screen real estate, on a phone, maybe a tablet you might be, but then it's still, quite hard to kind of with touch screen and end up clicking on the thing and
move that stop around by accidentally clicking on a touch screen. I've done that before.
Just get yourself if you don't have a good setup, understand it doesn't have to be the latest, I don't know, NVIDIA quad core. I'm just making words up here, but get yourself, even if it's a secondhand laptop or something that has a good widescreen, so you can actually, look at the charts in a proper, how they're meant to be looked at.
Yeah.
It will make a world of difference. If you're trying to trade on like a tiny screen, you're really making it a lot harder for yourself. Definitely worth investing in an actual laptop or computer of some kind.
Yeah.
Yeah.
And potentially keeping it just for that purpose as well. It's like what I do with my setup. I've got 3 huge monitors, which you can't see in front of, obviously now on the screen here. But and my PC is only dedicated for trading and making videos and stuff for all these podcasts that we do. But also away from home so I can focus.
Yeah, that does help.
Dogs barking, kids screaming.
The amount of times I've been in a trade and someone has been knocking on the door, it'll be the postman or something. I have to sign for something. I'm like, I don't want to leave. I don't know what to do.
Absolutely.
Yeah, it's definitely good to lock yourself away without any distractions. Put your phone on silent, put it away, and just focus. Do that for 2 hours a day, and you'll start seeing positive results. I can promise you that.
Yeah, focusing when trading is very important.
With everything, you can't truly become good at something if you're not going to put real time and effort into it, and you have to take it seriously. Treat it like a job, and if you do it right, it can be one of the greatest jobs in the world. It really can, without trying to overhype the whole trader's lifestyle, but it really can. It can offer many benefits to other jobs. I'm not here to give career advice, so to speak, but it certainly, the freedom aspect certainly attracted me to trading. And
for sure.
Yeah.
Same here. Big time.
Absolutely. Depending on how long this trade, it looks like it might take a bit of time to play out. We don't have to obviously stay on live until it finally plays out, because it can take even a few more hours, so to speak. But how much longer? We've got 20 minutes left. I mean, entirely up to you. It's your call, Richard. We can close this live session early. I think all the main information has already been given. Now we're just staring at the trade, waiting for it to play out.
If you want to be doing that, it's 100% fine with me if we don't have any more questions coming in.
Yeah, so viewers,
always just recap this, what happened afterwards.
Exactly. Exactly.
But, I mean, it is going slow, so it could take quite some time.
Yeah. And, that's part of the game. But the main important parts, I think, have been shown here. The analysis before getting in the trade. The patience part, where you're actually waiting for the setup to occur. When you did see it occur, you were quick. The moment you spotted it, bang, in, no hesitation. And how you managed the trade as well. All the important factors, all the important core fundamentals you need to be a good trader have been displayed here on live.
Thank you.
So thank you.
It took a lot of losses to become this way.
Yeah, I mean that's. I think everyone can relate to that one.
Yeah.
But if any viewers have any questions, now's the time. Any questions for Richard?
Feel free to ask.
Yep, we'll give it a few minutes to allow you to come up with something. If there's something in particular you want to ask, go for it. Otherwise, we might give it a few more minutes, because it looks like it's starting to speed up again. So
You have to sit through these roller coaster rides a little bit. Let's see. I think if it moves down lower again, I think we can then call it. But if it's continuing on its path now, it might be worth hanging on for a while.
Absolutely.
Yeah, guys, any questions, let us know. There's no such thing as a stupid question.
No, absolutely. We understand that people who've just heard of the term Forex trading only a week ago would watch this, all the way up to people who are, many months into it. So there is really no stupid question. That's what all these sessions are about. It is to teach, and it doesn't matter which part, where in the journey you are. We were all once beginners. There's no shame in that. So feel free, ask any trading related questions. We'll be more than happy to answer them.
I think it's a perfect platform for beginner traders as well to, speak to experienced guys. We're here to help. Back in the days, I didn't have any of that, none of that existed for me. Mostly self-taught. I did have two really good mentors in my trading career, which helped me a lot with, becoming what I am today, or a bit more of a successful trader, I would say, but consistent trader. And so perfect platform to do this, guys. Ask questions.
Yeah.
Speak with learning, hopefully.
That's very important advice Richard just gave there, especially the mentor part. Trying to do it all on yourself, all by yourself alone, is tough. It's very tough to be a lone wolf in pretty much any endeavor in life. If there is an opportunity where you can learn from people who have done it, absolutely use that opportunity. We do have a question coming in.
Awesome.
Asks, Richard, what strategy do you advise for those who just start trading on Forex to basically be profitable for the long term?
Oh, that's a very difficult question to answer. As you can see, I'm trading the indices here. They're actually my favorite markets to trade. I've personally started with Forex. I think that's sort of a natural stepping stone for most beginner traders. Nothing wrong with Forex. I just prefer to actually trade the indices. But when it comes to strategy, I'm not going to say use a EMA crossover strategy and those sort of things, because personally, I don't think those stuff work. I'm actually kind of looking currently, because I'm doing a bit more work with Hola Prime, and I know there are a lot of Forex traders, to see if there's some sort of adaptation of the strategy that you can implement with the euro US dollar, pound US dollar, maybe during those market sessions when most of the volume actually enters, like whether it's the New York session, the London session, Sydney session, Singaporean session, or whatever the case might be. Because there are occurrences when you get, because this strategy is based on a reversal that occurs during a certain time frame and then building on top of that. Now, if there's something like that I can build on Forex, then, and I already know that this works and I can see it works, then that's something I'll be more than happy to share with you. But I mean, maybe Sam, you can jump in there. There are so many different strategies out there. I can't tell you exactly what to do. I would, for example, say, and this is not a recommendation, if you're a new beginner trader, perhaps, try to stay away from scalping maybe in the beginning. Again, I don't know if I'm allowed to say this, but, you need to, it's a journey. Finding something that works in your time constraints. When do you have time to trade, for example? As I mentioned earlier, it's trading for me. It's not about just opening. I just dropped the kids at school on a Wednesday. I'm at home now, drop them at home or pick them up. Now I've got 1 hour to trade, thinking that I'm going to get trades, and I have to trade during that time frame. There's a lot of considerations. What's your time constraint? What's your personality like? Can you deal with a lot of mental stress that comes with scalping, for example, or do you prefer things nice and slow, rather, trading less often? It's a very difficult question to answer, to be honest with you. But I think if you can blend a bit of volume analysis into things, learn a lot about price structure and how markets tend to, or trends tend to materialize, and like I did here with one of the factors that I use, or steps that I use to get into a trade or to signal that a market might be reversing, is a price structure break or change in character. I personally also like following corrective patterns, knowing what their characteristics are. Sorry, I don't talk this much normally. And using that knowledge, never stop learning, and then try to figure out what works for you. It's difficult for me to say, here's a nice package strategy for you, and that's what you should follow. So unfortunately, maybe not the answer that you wanted, but I don't think there's enough talk actually in the trading world about actually strategies. It's always about, buy this strategy from me and you're going to make, X amount of money. But it's not, it doesn't fit everyone's personality. They're potentially not even going to work. It's just this guy making money off you. There are so many different strategies out there. Which one's going to fit you? I think that's what you're going to go for. Start studying that. Do your homework and look at your time constraint, your risk, how much appetite you have for risk, for example, those sort of things. It's difficult. Maybe you can fill in a little bit there, Sam.
No, I absolutely agree with that. It's a very difficult question to answer. But I think when it comes to picking a strategy, you have to use probably a bit of logic as well. If someone is out there and telling you, right, look, if this indicator crosses this indicator, that's, a buy signal, or you should sell here. Okay, but you have to use a bit of logic to that. Do you think institutions placing hundreds of millions of dollars on the table are going to be basing their decisions on one random indicator crossing over? Obviously not, right? There has to be a deeper analysis to the market. And essentially, your job as a trader is just to try and figure out the story. The chart is just a story, right? It's a language. See it that way. It's like when you learn a new language, a different alphabet or something. It just looks like gibberish at first, but the more you study it, the more you practice, it starts making sense, right? It's no different.
And you do get a gut feel for it eventually, Very often I can tell you, I think this is what the market's going to do, and a lot of time you're actually right about it, Not that you got some magic ball or something, it's just you've done the homework they paid the school fees and looked at these charts for thousands of hours before, It does, I think, become easier in inverted commas the longer you've been trading. A lot of traders, especially when they fall off the bus and they never try it again, which is unfortunate. I'm self-taught. Well, I had mentors, but it was my choice to pursue this and take it very seriously and spend a lot of time and heartache and lost a lot of money. But that dedication is what brought me to where I am right now. Yes, there's probably ways to speed that up, and what we're doing today is potentially a really nice, stepping stone for you for speeding up your learning curve in your trading career. But it's very difficult saying like you should be following this or this strategy because this is more profitable than that. I don't think there is such a thing, to be honest.
No, absolutely. So be mindful of which strategies you are going to. If something seems too simple, it's a simple one indicator strategy. Use a bit of logic behind that. There is a deeper meaning in the market, so to speak, right? There are deeper things, and at the end of the day, look, there is no strategy that works 100% of the time at 100% of the day. Like Richard said, this is what he just traded here is at a particular time. US Open, the liquidity sweep, right? If you traded this 3 hours ago, this trade probably wouldn't have worked out, right? Well, maybe not 3 hours, but like 4 hours or whatever ago, probably wouldn't have worked out, right? So everything is within context, and that's important. Yes. So, like you said, find something that suits your personality, something that works with your schedule, so you don't have to quit your job or do anything crazy like that.
Yeah. Please don't do that.
Yeah, definitely do not do that. That's the worst thing you could do. And just be realistic in your expectations. If you're just starting out now, this is the first time you're trading. Be realistic in your expectations. It will take time, but eventually you will get there. I mean, it might, there is no shortcut to it, but you can definitely save a lot of time by being, following the right people, taking on the right advice rather than going down rabbit holes of people who are just trying to grab your money, right?
Yeah.
So, yeah, but that would be my advice when it comes to that. Yeah.
No, sound advice for sure. And you probably, I don't know who asked the question, but you're probably already hearing other things from what started to get you into trading in the first place, right? When there's so much crap out there on the internet, it's like, promising you the world, and you very, very quickly find out that this can be very difficult in the beginning. Unfortunately, a lot of new traders fall off the bus thinking that's too difficult, but you just need to, work forward. If you've got the dedication to be there in the long run, then I truly believe you can make it work. That's for sure.
Yeah, absolutely. And discipline is probably right up there, before strategy, I would say, in a certain degree. And that's why things like, taking like an Hola Prime account can actually help you as well, because it forces you to be disciplined.
Yeah.
You know the rules. If you do that on your own account, you're probably not going to be sticking to a 5% drawdown, or so you're going to be over leveraging. You're going to be potentially risking half your account. You're going to do stupid things, and you're going to just be stuck in a really bad loop, right? Until eventually you suffer so much pain, you will learn. But discipline is so important. So it can be beneficial to be forced to be disciplined and make it a habit through that. But I think we could pretty much wrap it up there, Richard. What do you think?
Yeah, I also think so.
Yeah.
You're sitting sideways here now for 20 minutes almost. But anyway,
yeah, it's probably going to range.
We'll recut this again during the next session. It was a profitable trade. I'm not going to let it go to break even, to be honest. Potentially just get out. But yeah, I think good session. At least we could pull off a profitable trade, which was nice.
Yeah.
It was a bit stressful
really
to do this in front of people, but yeah, there we go.
But that was awesome, and I'm sure people watching learned a lot. And like I said, if you missed stuff in this session, rewatch it. Rewatch it.
Yeah.
Because it's just going to range now, probably for quite a bit. But yeah, that was awesome, Richard. Thank you so much. I really enjoyed watching it as well.
Thank you. Nice being with you here today, and everyone else. Thank you very much for joining.
Awesome. So we'll definitely be back with more sessions. Richard will definitely be doing more as well. And
if you missed the first part, don't know what we're talking about, how we took this trade, then go watch the recording. I think that's posted a little bit later today or tomorrow or something like that.
I think it gets uploaded live pretty quick after. I think YouTube does it automatically. So you're probably 10, 20 minutes and it'll be there. For the viewers, follow us on Discord. Very important. It's a great platform to get quick communication. And when we go live with these sessions, people on Discord generally find out first, right? So if you have the app, just click one button and boom, you're in. And it can really, you won't miss these live sessions. And it can really help you. So definitely follow us on Discord and all other social media. And yeah, we will catch you all very soon again. Richard, it's been a pleasure.
Thank you very much, Sam. Cheers, everyone. Have a good one, and we'll see you soon again.
Thank you, everyone. Bye-bye.
Cheers. Bye-bye.